Welcome to Carbon Trading Chronicles, the podcast that untangles the complexities and potentials of emissions trading. Whether you're an industry expert or simply curious about how emissions trading supports the energy transition, this podcast is your platform to join the conversation.
Welcome to another episode of Carbon Trading Chronicles. My name is Stefan Feuchtinger. I'm your host here, and with me today is Riham Wahba, Senior Analyst in Vertis Environmental Finance.
Welcome back, Stefan.
And our special guest today is Oliver Tritton, who's been trading EUAs now for 10 years, been a trader for 15. You're wearing a little bit too many hats for me to even remember. You're about to launch a fund, and you've also recently joined a company called Carbon Insights.
Carbon Insights, yes.
Welcome to the show. Well, we have this habit in this podcast to focus on what matters for the market, right? And so the first question we always have to all of our guests is, are you bullish or bearish? And before I ask you, I go to Riham. Riham, it's been a while. You bullish or bearish now?
Yeah, it's been a while indeed. Like, I'm bullish in the short term. Longer term, it depends. So for the summer and after the summer, like, very much depends for me.
Okay, longer term is after the summer, you mean?
Yeah, so it depends what happens then.
Right.
A lot of changing factors, so yeah.
And very long term, you're super bearish?
No, I'm not.
That's good, because I'm going to challenge you on that one. What about you, Oliver?
Short term, I'm bullish. Bullish from here up until at least 75. I think to really push on from there.
Which could happen within 2 hours of recording
that's
this.
true. Yeah, the way things are going, I think we could get there very soon. I think to push on from there, we'll need to see a real turnaround in the fundamentals.
Right.
Like some sort of short-term trigger. And also we need to see how the Trump tariff situation plays out.
Exactly. I mean, that's changing a lot, right?
Yeah, definitely.
That's definitely giving a bit of a boost there. And what about the, longer term you want to say? Or
longer term, I think coming into June, July, we'll revisit some of those sort of 60 levels, if I'm honest.
Really,
yeah? I
June,
think so.
June already,
yeah? Potentially. Then I think coming into the next compliance period, I think we sort of start to push on from there.
Cool, and I take over from my side. So I'm bullish. I think we're gonna see 80 before we see 60 again, or even 65 in the short term. But I have a bit of a different view on the time frame. So if you're looking at, and we're going to discuss that about everything that happened in the US and all of these things, it seems to me like carbon has become very dependent on all these developments. So it's trading much more like everything else. And I really think with the worst is over with the potential tariff threat, right? So it's getting better. We're getting better news each day. So I think there's going to be a big rally into June. Also because it's really hard to be short carbon in June, right? That's usually a time to be long. But I do agree. I think there has to be a coming back after all of this. People are going to take profits, and I also think something's going to happen again. Maybe from Trump, maybe in geopolitics. I feel like something's is about to pop.
So I have a question for you, Stefan. You said that like you are bullish until 80, so you don't see exits at 75.
Price rarely just shoots up straight. I think there's going to be a little bit of noise, but I'm not good in predicting that noise.
And who will buy that, in your opinion?
I think everyone.
Everyone.
Maybe not industrials, right?
Okay, yeah.
So that's the point if you go into this. So industrials have been buying it up really strongly when we hit 60.
Exactly,
right?
Yeah.
It's always said the smart money are the funds and the not smart money is everyone else. But I think this year is almost the opposite, right? Because in the beginning of the year, funds bought everything up to 83? And then they had to get out of that. And then the industrials, for once, were actually the ones buying at 60 and 65.
Yeah, true.
Surprisingly, because they are the ones hit the most with the tariffs.
But like, I think there's, like, back to your point, basically, that there is cautiousness and there's a lot of unknowns around the Trump tariffs. So do you expect some clarity maybe after the next weeks?
It's hard to say when clarity comes. I mean, we had good news earlier in relation to US and China relations. I think the Europe and US have been sort of engaged in quite an aggressive rhetoric war. But I do hope that they sort of come to their senses and we find a sort of positive route forward in the next month or so.
It's almost, I mean, if we jump into this geopolitics a little bit, and we're not by any means experts by that, but we have to think about it because it affects the market so much, right? So it almost feels like, so Europe pushed itself against the door, again, into one corner with Russia. It's going to be difficult to come back from that. But now also the US is not our best friend anymore, it seems. So what's that gonna do? Is that gonna, and then China and the US seem to have a deal going on. So who's gonna be whose friend in the end of all of this?
It's a tricky one. Well, I think the Brits and the Europeans are becoming friends again. Cozying up to each other.
Yeah.
So that's
a good
something.
point.
Whether there's enough of a market there, I don't. Obviously, I'm British, but I don't think the UK can really step in for the amount of exports that Europe does over there. I do think the Europeans will potentially start to re-engage with China.
With
in
China?
my opinion.
Yeah.
I think so. You look at the size of that market. I think that's like an obvious route to go. And particularly even in the UK, we're starting to see a few politicians talking about that, the sort of slightly anti-US rhetoric and suggesting we should look elsewhere.
Yeah, but I think this shakeup is actually materializing in this. You can see the headlines about how the Chinese officials are getting conversations with the European officials. So overall, it's causing this reorder in the geopolitical dynamics around the world, which is not necessarily bad in my opinion, because like the water was a bit stagnant for a bit, and then like Trump somehow threw a rock in the water, so like you can see the ripple effects of it and how things are changing.
Cheaper products for Europe then.
Well, that's a big question, because you've seen Ursula von der Leyen and some of the commissioners are speaking about anti-dumping laws, because there is a big fear on the market actually about the volumes that would be lost from the trade between the US and China, and how they'd be rerouting to other markets, including Europe and Southeast Asia, by the way. But Southeast Asia is expected to be the hardest hit because they don't have as much protectionism. But for Europe, there might be some protection in there, but also it's a bit shaky.
And the shakiness is also, some of the damage is also done, right? So I
Yeah,
think
of course.
we are looking into the short-term effects, right, which is just the headlines, which is the markets, how they're reacting on the short term, but on the long term, once the ports are closed for a while, we've seen that during Corona, that has a big effect on the whole supply chain, right? And those effects are gonna come at some point, right? The economy is gonna feel them. I just don't think that the market is going to act upon them yet, because there's so much hope still and positive sentiment out there, right? And almost like detached from economy and fundamentals, I would say, which is pretty similar sometimes as carbon, right?
Yeah, well,
But eventually
the
comes
market-
back to the
yeah.
fundamentals.
the market's absorbed all this awful news.
Yeah.
Not just even with Trump, like the Trump tariffs, but even before then, like we've had European stagnation for years.
Right.
Super high power prices, very uncompetitive industry.
Mhm.
Yeah.
But even if you look at just the emissions data, industry's been hit. But I actually think it's held up really well.
Mhm.
Yeah.
Obviously, I think this year it's down 5%, but industry's still there, buying away. Power generation is obviously, like this year, it's been very strong on
Yeah.
the thermal side. I
Surprising,
personally
yeah.
think, very surprising. I think maybe that'll change into summer. As you look at solar, had a record Q1.
Mhm.
I think that's going to displace a lot of emissions this year,
Yeah.
like particularly over summer. But I think it's just the fact it's absorbed all that bad news, and we are where we are. Now we're back above where we were from Liberation Day.
Yeah.
We're like, crikey, it will take something really big, like a tail risk event to really push this down again.
To push it strongly down. Yeah, which makes me think, it's been a few months since we had our last podcast. If we rewind a little bit, then before the winter, the expectation really was a different one for emissions, right? So the expectation was, emissions are going to keep dropping double digits. At least that's what we expected as well. And then you had a surprisingly cold winter, not warm winter, with everything that meant, right? So hedging came back on, gas prices were high. And at some point it felt like, this is, you had a huge length of the hedge funds on gas, right? So there was huge bets out there. But then that also didn't happen, right?
But it wasn't just about the cold winter, it was the wind speed, for
Yeah.
sure. The wind speeds are the ones that affected the
That's true.
generation in Europe in general in Q1. And this high pressure, sort of like anticyclonic weather pattern, basically like it's enclaved the continent for a bit, and then afterwards, like it's still unsure whether this is going to happen again at the end of the year or not. So this was one. The other one was the pace of the withdrawals from the storages,
For gas,
which
yeah.
was quite fast.
Mm-hmm.
And then the uncertainty around the refilling, which
Yes, that's a good
like
one. Mhm.
miraculously, the Trump tariff like did so well for the European storages that basically it caused rerouting of the LNG shipments from elsewhere to
To
Europe.
Asia
So like
and-
it's helped with the storages, and you can now
Mhm.
even look at the slope of the refilling, and like it's quite positive and it's accelerating. So it was all of this in the first quarter, and then
And on
we
top of that,
interpreted-
right? On top
yeah.
of that, this whole trade war has this effect as well, because at least it seems to me that it's not that likely that Europe is going to accept Russian flows to a higher extent anytime soon, right?
Well, then I think this brings us to the question that the guest has raised the other time about like when do you see the decoupling between the EUAs and the TTF?
Now, this year, we've seen the decoupling happen. I think part of it was the investment fund length that you alluded to, which
Exactly.
suddenly they had to panic and exit that position.
Right.
At the same time, I think there was quite a lot of sort of long-term sticky money entering the EUA market.
Mm-hmm.
And then
From some funds with longer
funds
perspective.
for the annual reallocation. You know,
Right.
some people getting along. You know, there's quite a thesis around carbon being the inflation hedge, you know, the climate change hedge.
Yeah.
So I think at the start of the year there was a bit of money turning up there, and then I think there were quite a lot of algos, obviously trading
Yeah.
the spread between gas and
But
carbon.
isn't it
Yeah.
also, I mean, didn't it decouple when the price didn't really move that much in one or another direction, but as soon as gas started moving strongly again, wasn't there more coupling again? In other words, you know, I think it might not be over yet.
Over the last sort of 2 months in particular, it's really broken down.
Yeah.
Like carbon's held up incredibly well. Gas has fallen off.
Mhm.
But I do think on maybe some of those quiet summer days
Mhm.
when people are looking for a reason, to be like,
Right.
what's caused it today? Oh, gas is up.
It's almost also, I mean, carbon was sideways. If you looked at fundamental balances a year ago, that was sideways and expected to be sideways for 2025. But now we are here with the strong emissions from power that we've seen in Q1. Our fundamental balance is now bullish for this year, not a lot, but slightly. And the next couple of years, 2-3 years, are looking to be bullish as well, which is for me why if we have another drop because something happens later this year, it can only last so long, right? And it's kind of the same narrative. And I think to some extent, people are overestimating where carbon can go, right? So I think you see a lot of narratives out there, which is a bit like 3 years ago. Oh, we're going to double and triple. No, we're not. Politicians are never going to let that happen in the current economic circumstance. But the train has left, and for it to come back, there is going to be demand, I think, again, from the funds, including maybe from industrials, even though they catch the falling knife really well this time. I think they are not going to play such a big role the next time around because a lot of them, have more than enough than what they need. Also because they had Q1 and Q2 historically is when they buy, right? So there's going to be a little bit less demand, I think, in the second half of the year, with the big caveat that nobody knows what Trump's going to do next, or what's going to happen in geopolitics.
Or perhaps some election or something like that, or something political. So if you look at the risk reward, you'd think, okay, well, this could perhaps we revisit where we were before, but it does feel like there's going to be decent buying in the 60s.
And especially coming from industry, I mean, we've seen a lot of abatement projects that were planned that people just said we're not going to do it because the price is where it is and we need way higher prices for it to go to our board and make that investment decision. So I think there you're probably going to have slightly higher emissions than what most forecasters expect. But on the other hand, most forecasters expect the economy just to be fine because everyone just uses IMF data, and IMF data is what it is, right? So I really think that the decarbonization we've seen in the last couple of years was not mainly driven by decarbonization. It was just moving out.
Well, there's the narrative, of course, of closure. There's the narrative of reallocation. But then I want to come back to the points that you mentioned with two questions, actually, to you, Oliver, because you have skin in the game, obviously. So the first one, because I couldn't infer exactly from your answer. So is the bullish conviction that's been in place for a while now about next year, the one after, and the one after, do you see it still strong? So that would be my first question. And then the second question, that is, I received also from someone on the market that they said, do you see Peter Liese sitting the floor for the market?
Because there was some, maybe we need to clarify that, because there were some comments reported in the press about him.
But that was some long time
a
ago,
long time
before
ago,
Trump.
where I think he said something like 50 below 50 would be too low and above 100 would be too high. Something like that,
something
right?
like that. So yeah.
Well, there was one article recently saying the French government, I think, were saying 80 euros. So I think the bullish conviction stands, but I don't think, sort of long-term money into EUA is thinking we're going to 150, 200 in the next 2 years. I think they might be questioning that thesis now, because I do think when carbon sort of feels comfortable in the 70s, doesn't it? Between 70 and 80, everyone's sort of quite comfy. 60, people get nervy. 80, 90, that's where the political pressure starts to ramp up. And I think we have a very sort of fragile political situation across Europe, and they're not going to want their industries to go bust.
When are we going to push through that? Or if we
push 100.
Push through 100,
There's so many things that are actually similar across the commodities markets. Cocoa used to trade in the range from about 2,000 to 4,000. Yeah. And then it went through the roof. I think, I'm not sure exactly where we got to a high, but like 11,000.
Yeah.
Coffee, Arabica went up to 4 cents. This is really abnormal high prices. So I think when you look at the amount of money that's been created in the last couple of years, and the fund length that you alluded to, you have a lot of money under AUM now looking for alpha, looking for homes. And generally,
it's going to find its way into everything, right?
And the psychology of people, and you see it all the way, people prefer being long. As a rule, you can see it so many different ways. Everyone likes being long. Yeah. So
especially these type of markets that are structurally supposed to go up, right?
Yeah. So I think with that in mind, and we've seen these crazy moves in other markets like gas, cocoa, coffee, I think we potentially could push through. But as soon as there's a hint of the EU getting involved or someone saying, listen, this is too high, our industry's dying, then I think we quickly get back and we come back into it. But I think if we took out the sort of political risk to this side, then I think we could easily push through that, but that's going to keep a cap on the market.
Or even if you do take in the political, we're going to have a reform proposal next year. I was about to mention that. Yeah, and that's who knows, but
that's going to cause volatility. Like, we will see different proposals coming from all directions.
And just around that could be interesting. It's too early to say, right? But that could be maybe somewhere where I find it hard to believe that we push through 100 this year still, but who knows, right?
2025, I don't know, maybe towards the end of the year, I'd say there would be some
bullishness. It's just a risk reward. If you're a fund right now, you went long at 70, you want to take off some money, I guess, unless you have a super strong conviction, which some of those people seem to have, right?
Perhaps, obviously, you alluded that you guys have made your S&D is now looking more bullish this year. Yeah. I actually think that will continue into next year, because I think, as we've seen with Germany's just announced this extra defense spending to pump the industry. Let's get it going again.
Right.
I think that's going to be all the case across Europe. So the economics don't make sense. Like, why is this industry running at a loss, or a chemical plant? But actually, the government's going to keep them going.
Push
we just saw the UK government bail out another steel company.
That's true, and everything is
they're loss making, but they're going to be.
Governments are growing around the world, right?
And maybe the trade war will grow on that, because do we want to be reliant on China or whoever it is for aluminium for our own defense?
Right.
Yeah.
So a lot of metal smelters, melting capacity and melting.
So you have to decarbonize if you're Europe right now, but you also have to now make sure that you have those other topics, right? And it's almost like I haven't heard anybody talk about the Green Deal recently, have you?
No, it's been taken down a notch, or two notches.
Or five,
where it's like everyone now is speaking about competitiveness, about simplification of the rules, entries and exit and business and so on and so forth. So this seems to be the caveat for all the institutions.
And I still think how gonna people react to that, right? In terms of hedging, because you still have reasonably strong decarbonization of the power sector, and everybody has been waiting for industry to take the lead, right? And everyone's been, but industry is going to be more important. What we tend to see when talking to our clients is that industry is not yet there where they buy very long term. At least not all of them, right? Some of the bigger guys, and that they have the cash, etc. Yes, but the chunk of industry is not yet in such a position where they are running, where their hedging is becoming more important than their utility hedging.
But for some of them, it doesn't make sense because they are still spot trading.
Exactly. And then the question is, well, when is that going to change, right? With benchmark changes next year, maybe that's the moment.
But the other question as well, who's going to absorb the hedging demand when it falls from the falling hedging demand from the power sector? Is the industry going to pick this up in the right time?
Or does it matter because the balances are anyways getting tight, even if there's less hedging now from power? Maybe that balances out. I think for us, we still have a tight balance even after
But then, like, because part of the balances that we see, like, if we speak of the market balance, like, part of it is hedging, isn't it? So then, like, let's say the hedging from the power sector is dropping and no one is picking this up. So you wouldn't see more demand or, like, the same amount of demand for futures or options on the market. So you might not see the same level of liquidity. You might not see the same level of speculative trading because of that.
Yeah,
So
and I
then,
think we've seen some of that already.
so then,
change, right?
like, it might actually affect the bullish narrative in a way, even though we see the supply and demand, like, a deficit that is running up until 2028, a strong one. The price signal might not be as strong as everyone is expecting now.
Oliver,
just because
you've
of that.
been hedging, or you've been involved in a company, a utility in another life, no?
Yeah, quite a long time ago now. Yeah. Almost 10 years, yeah.
What do you think, what would they do right now if you were there right now, in terms of, changing power stack, emissions are dropping? Do they just do business as usual, or?
Well, I mean, my understanding is that the way they've hedged themselves has changed a lot over the years. It used to be very sort of mathematical almost,
Yeah.
It used to be almost like when I was sat in that seat, we didn't really speculate too much on carbon. It was just a input on our and the cost of running our plant.
Right. Also because it was
obviously if
still,
the power and gas,
I guess, a different price. Yeah.
It's profitable. We'll sort of lock it in, but we'd often trade a lot more throughout time. As you get closer and closer to delivery.
Right.
But you'd sort of trade the commodities together. My understanding is over the last couple of years, there's been, the utilities, some of them at least, have started to trade a bit more like funds.
Yeah.
When taking advantage of when carbon was very low.
I've been
and
so
lifting
surprised.
as much as they can.
Yeah.
And then I also talked to a few other utilities who are still almost like some of the other industry. It's like they want to buy, but they've got to wait for the board meeting.
Yeah.
And these are very big utilities.
Right, and then there's, I guess, is it Poland, right, that has a price ceiling for the power price for consumers?
Yeah.
So in a way, that takes away the whole market narrative, because then why hedge, right?
Yeah.
Just buy when it's cheap, I guess, is a strategy that would make sense then.
Yeah.
And so, but I was quite surprised as well when I've heard this left and right, that even German utilities, not the big ones, that are just opportunistic about it, which that makes it interesting because it makes it a crowded space, right? But it also takes away maybe some of those extreme cases where you have prices go to 30 or 40, which, right? Because then you're going to have enough people to step in from different parts of the field.
But speaking of utilities, actually, like, something that I heard recently was that some of the big utilities, they are not hedging as much out in the future as they used to do in the past, just because of the uncertainty, all the uncertainty that is surrounding everything now. So maybe they are hedging now for 2028, but beyond that, it's not the case, which is quite surprising to me, because my
It
understanding
used to be
is
like 4 years,
exactly
just a small amount.
It got reduced quite a lot, and then I'm wondering if this would again influence the hedging behavior as we go forward.
If it changes, you mean? If it changes back to hedging further, or you mean if everyone jumps on the train?
Well, like, if it would be like, if it would slow down and that's it. So like the slowness would continue with us.
Maybe we're agreeing a little bit too much here, but that's why I'm thinking there's all these factors, and maybe they're not gonna balance out completely, right? But at least they're not gonna make a 2x or 3x on carbon, or also not a complete inundation where we go down to 20.
I'm not pro the recession scenario anymore now, Stefan.
Really? You dropped it?
Because like in the beginning of
What
the year,
happened?
it's like, doom and gloom. Like all the factors that we mentioned, actually,
I
like we're
still
seeing the
have it.
support, where we're seeing the government stepping in, even though it might be cosmetic, might be the growth that we see is not actual growth in the industry because
I
they're
still
expanding.
think there's gonna be so much pain coming from this whole trade war, and I just think it takes more time.
Okay.
I know I sound a bit like the guy who's always doom and gloom, and
You're
one year he's
the
gonna be right.
Simpson, yeah.
But I do think there's a lot. It's not now, right? Because markets are excited, as you said. Money supply overall is growing massively. You see that in crypto a lot. M2 money supply affects all assets pretty much. But in the end, it will come down to economics, and I'm not that convinced that governments will make up for that shortfall.
But are we not in a world now where the whole sort of financial monetary environment's changed? Where we have, you look at government spending during the COVID times.
Yeah.
And again, going back to the UK, like the government spending's never gone back to sort of pre-COVID levels. It's basically 10% higher GDP than it was before.
Right.
So of course, if that spending goes back to normal, massive recession.
Right.
So we're in a world where I think there's obviously huge incentive just to keep spending You almost can't have a recession for more than a quarter.
Yeah, that's
and even
true.
when you look at Europe's numbers,
Yeah.
they've managed, obviously they've spent a lot of money, as
Yeah.
you said. And even with that, the GDP sort of trickled along. It hasn't
So
been great.
exactly, but then it's like a bit like how long can it go, right? And as we've learned over the last 10, 15 years, it can go pretty long, right?
A long time, yeah.
Yeah.
I mean,
Yeah.
a lot of short funds have obviously closed over the years.
But something on the other side, one point that we didn't mention, and I think that almost nobody has on the radar, because I haven't heard many people talk about, is this mentioning of the European Commission suggest to raise 100 billion from EUAs.
It's not new supply. If this is what you're aiming for, it's not new supply.
That's what they're saying.
That's what they're
And
saying.
that's what everyone is buying
Yeah,
into.
exactly.
But it has to come from somewhere,
Yeah.
right?
Like either you reshuffle.
So what they did between 2019 and 2020 was there were a couple of unused pots of allowances that have never been allocated. And those unused pots, all of a sudden, were there to be used in a reform to basically create a compromise for the MSR. Those unused pots, there is that again, because basically you have a big reduction of activity levels, which means less free allocation, right? So you have that pot now between what's supposed to be free allocation, but what's actually been handed out. And that pot, and this, I'm just, I have no insight into if that's really what they're going to do, but that could be used very easily to bring it to the market. They can say it's not new supply because it's been in the cap, but it's just never made it to the market, and it would not have made it to the market.
Yeah, that would be mega bearish for the market.
Yeah, I think that would be a big surprise because everyone buys into, it's not new supply.
It's not going to be new supply.
Let's move on. Yeah.
But in a way, that would help them out a lot if they could phrase it like that. And also, let's say they wait a couple months and prices are at 80, 90.
Yeah.
If they do it then at least that the price can fall perhaps back to 70. And then it goes up again. So, and it also takes the political pressure off them if they've got the country saying we're massively uncompetitive, we need a lower EUA
Europe
price.
has become much more political, and as well the European Commission has actively tried to be more political than 10 years ago when it was much more just it didn't have its own defined, let's say, foreign policy. I think there is this push to be political. So I really think that people are overestimating or underestimating the amount of guidance that will happen through politics. What is difficult to trade on that is you don't know when it happens and to in what extent. But that's where I believe that when we are trading at 120 or 100, pushed through even 110, at some point people are going to get careful there and maybe rather take off a bit of risk rather than hoping for 150.
Definitely, and I think you could end up in a slightly bizarre situation where obviously the governments, particularly in the UK and other places, they won't want their key industries to go bust.
Yeah.
So let's say on the one hand you're collecting auction revenue,
Mm-hmm.
then the other hand you're bailing out the companies because they're loss making, and also you don't want the people to lose their jobs. You sort of end up in this vicious circle where
maybe
no one wins.
No one wins. Yeah, but let's speak about the UK maybe for a second, right? Because
please.
what you make of the UK market? I mean, we have had this big push upwards, in the hopes of linking. For me, it sounds like it's all based just on the linking hope. I've lost a little bit the narrative, or I don't know really where we stand there now. We think, or at least I think, that fundamentally the UK doesn't look that rosy, and it just lifts up from hope.
Yeah, I mean,
opium.
I think, obviously at the start of the year, like most people, the risk rewards it was in your favor.
Mm-hmm.
And then you saw that huge price up, and then it sort of dipped down a bit again. And then just, I think it was last week or the week before, we finally breached that level.
Mm-hmm.
Yeah.
I think, obviously, to me, it's all based on this potential merging with the EUAs, a few potential supply reduction schemes they've talked about.
How far can that go? Isn't that dangerous? I mean, that's a classical buy the rumor, sell the fact kind of thing, right?
Exactly, yeah.
So you don't want to jump on the train late, I guess.
No, definitely not. I think a lot of the price appreciation is there.
Yeah.
But at the same time, if you trade it,
well,
it's
on the
very
other hand,
liquid.
if they do announce something, right, and say, we're going to link within the next 3 years, and here's the process, then that's you also don't want to short this, I guess, right?
Do you think this is likely though? Like an announcement with a date label on it?
Yeah, I think so.
You think so?
Yeah, I think they'll be doing everything they can to try and
To give something
get good relationships with the EU.
Yeah.
So yeah, I think so. But now it's all pure expectations as opposed to fundamentals. Because fundamentals, I think, it still looks
and there's
quite
still
bearish.
the whole SAM, the news on the SAM.
That's parked. That's
Yeah,
parked.
parked, yeah.
Is it parked?
Yeah,
Yeah.
it is.
See, I've been out
You've
of the
been out
market
for
for
a
too
while,
long.
yeah.
Well, I blame it on my newborn. You
No,
know,
it's
what happened there?
it's parked. This is what I heard. Like it's the market is just, or like the authorities, they want to define exactly what's going to happen on the linkage first.
Oh, really?
Maybe you know it best. Actually, like you're maybe connected to people there, but this is what I heard. So it's parked for the moment,
Right.
and then we will see what happens first with the linkage. And then, like, if the linkage happens, then it's a pretext actually for other policies to move forward.
Right.
But the design should align with, or like, should give space to align with the EU ETS. It will all depends on the linkage itself, like the dynamics, whether it's going to be like the Swiss or like
Right.
whether there's going to be exchange between the caps of the EU ETS or the UK ETS. So like, a lot of blur is out there now. Like in my opinion, at least, like we don't know a lot of the details.
Right. So it's kind of a. I mean, but is the spread interesting then to trade? If it,
Now,
yeah.
Not now, I
No.
don't think.
No,
No, I
right.
think that's
Flat.
done. Yeah,
Mhm.
that's
Yeah.
done. I mean, the tiny margin that's left,
Yeah.
I mean, it's not worth the risk. Because if
Right.
for whatever reason it's derailed,
Yeah,
or
yeah.
they say, oh, the date is 10 years away,
Yeah.
then, you're sat on a relatively illiquid market, which is very hard to exit that position if you've got a good size on.
Yeah. I'm just it from the conversation. It sounds a bit to me like it was a good trade maybe on start of the year,
Yeah.
but also shorting it is a bit tricky, right? So maybe there's not that many people who have the guts to do that. Some
Well,
people will
My mentor
will listen to this.
Yeah,
I was like, well, actually, I do.
yeah.
Let's maybe just speak a little bit also about your trading style. Things that you look at
Yeah.
to get a bit of a sense from somebody who does that every day. 10 hours a day.
Staring at the screens, yeah. So I think, obviously, I got my training at a utility.
Yeah.
So I think with carbon, it's quite easy to get almost overwhelmed with how
sentiment.
many different things you can look at. You go down a rabbit hole. And I've always been part of quite small teams. When I say small teams, more or less normally
5,000.
just me. Just me. Particularly since I left the
That's small,
utility
okay.
and I've been on trading desks, I've normally just been me. So I've had to sort of limit what I look at. So I focus very closely on coal and lignite.
Mm-hmm. Coal, yeah.
Coal and lignite, to see how much they're, is it profitable for them to run? Is it not? So that obviously is quite weather focused, quite power focused.
Mm-hmm.
So I look at that very closely. And then now technicals as well. So technicals is a really big factor for me because I kind of sort of think, there's probably a lot of people in the market that know a lot of stuff, which I might not be privy to until, the market's obviously moved. So I think that information is sort of within the technicals, the market's never wrong.
But that's what I find always tricky is how do people, and in this case, how do you, understand when is it good time to trade on technicals because they are running the show, and when is it, I don't know, on the weather or on other things. You just
So I tend to trade on sort of shorter term fundamentals, I'd say. So I look at things on a monthly basis,
right.
Because lots of analysts like you, Stefan, tell me, I should be long all the time. Maybe not you.
I
Other
don't-
analysts
I
I'm
don't-
speaking to say, "Oh, look at 2027. It's a massive bull." But people don't appreciate, if there's a 30% drop between then, you've been tapped on the shoulder and asked to leave your seat. Ideally, you want the fundamentals to obviously line up with the technicals.
Right.
But then you take into account what's happened the last 6 weeks,
Right.
and everything's off the table, right? Because then it all became macro and
Right.
Trump related,
Yeah.
which is why we've seen.
Which
so
is it's really a theme right now, right? Like last
Yeah.
year it was gas. You had to know what's going on in gas, and that's maybe still the case to some extent, but you really have to know what's happening in equities.
Yeah, exactly. And like I follow obviously correlations with a bunch of other assets and commodities. So
Other physical commodities as well.
So obviously I have a background in base metals as well.
Right.
So actually the copper and carbon correlation has increased very significantly in the
Really?
last 6 weeks.
Oh, that's
So
very
you follow all
interesting.
these things, and I think it just sums up because that's copper is sort of what do they call it? Dr. Copper.
Yeah.
Is sort of a gauge on the economic sentiment.
Yeah.
And that shows how much there's no real reason why copper should be trading closely to carbon,
Yeah.
European carbon.
Yeah,
But it shows
exactly.
how much everything's become sort of sentiment, tweet driven.
Yeah.
And maybe algos, or you think
Yeah,
who's behind that?
Yeah, I think it's the algos.
Or is it just the same hedge funds that trade the same thing and they just get the same weather
on,
data?
Yeah, risk on, risk off. I mean, going back to my cocoa days, quite a long time ago now, but we used to have our own private weather stations.
Right.
We used to do what's called pod counting. We knew the fundamentals inside out, but the market sort of went through, I don't know the correct word for it. I call it macroized. People weren't so bothered by the Ivorian winds that was going to impact the quality of the beans. It became very much, what's the dollar doing? What's like going up or down? So we sort of, in a way, you start to lose a bit of your edge because you know the fundamentals really well.
Right.
Yeah.
But it doesn't matter because it's risk on, risk off.
Yeah.
And you like to hope the market sort of reverts to the way it should normally trade. But
And
I think in times
maybe
like
it
now,
does, right? If you can stay liquid for long enough.
That's the problem.
That's the
staying
problem of
liquid.
knowing when is the time to go back to fundamentals, right?
Yeah. But one question here, actually, because you mentioned that you look at coal and lignite and the profitability.
Mm-hmm.
What do you do? And what have you been doing actually now? Because the profitability has been the negative for a year.
Yeah.
Slightly more than a year, actually.
So this is where I think some of the reporting on carbon can be a bit misleading because if you assume everyone's rational, people aren't going to run their power plant at a loss, particularly with power prices where they are. And I think the way the market generally works out these profitability, the spreads, I think it's actually a little bit wrong. When it comes to actually generating, we're not buying the coal on spot or the month ahead. The coal's already there. We have a long-term supply agreement, so you're not always tracking the day ahead or the month ahead. So, and if you look at the coal and lignite production, the actual outturn, what's actually produced versus the forecast, generally it always seems to be higher. And I think it's because the market's always saying, oh, well, the spreads are negative, they're not going to produce. But actually, I think that what they're looking at is wrong, and it is profitable.
Yeah.
So,
but it's profitable because of the long-term offtake agreements, or because they can ramp up and down faster as well than most people assume, right?
People look at base load a lot, which again I don't really use. So I don't look at the base load. I look at the peaks.
Right.
And at least when I was there, and again, stressing this was quite a while ago. But if you look at the production of those plants, it's quite easy to turn on for the peaks.
Yeah.
You just do 4 or 5 hours a day.
Yeah.
And the other thing to remember is, again, in the UK market, these plants get paid just to be there as reserve.
Right. Yeah.
They get payments over winter. So there's other things as well to incentivize keeping them on. And actually that reminds me of another point we alluded to earlier, is part of the S&D going forward is the sort of phase out of coal and lignite.
Yeah.
I personally think they're going to stay on a lot longer than people think.
So the German government basically, like what they promised, they would stay.
They
say that they are not going to
They
phase
say we're not going to run these, but we'll just keep them there. Just
to some
in
extent,
case,
especially
just
with
in
everything
case.
that happened in Spain just recently, right?
Exactly. We had that, and that we're seeing now solar. When it gets to a really high percent of the grid, it becomes very hard to manage because we don't have the
Nobody knew where is
the battery storage.
Nobody's where that level, right? Where you don't have the battery storage yet. Where is the moment where you get problems with the grid? And I mean, Spain is probably now a bit of the wake-up call for all the grid managers, or for the politicians to actually listen to the grid managers who have been sounding the alarm bells for a while.
Definitely. And if the green transition, if you look at the energy projections to 2030, how much more power we're going to need. You
look at those forecasts from, I don't want to name any names, right? But you have those demand forecasts, and they always point up in a straight line, right? Because everyone says, everyone's going to drive around in a Tesla in 3 years.
Yeah, or a BYD, I think.
Yeah.
I agree. But just back on this point, I was looking at the UK numbers, like for the demand, power demand, and like what struck me for a bit, it was that like it's been flat year on year. Hasn't changed, just taking everything that is happening in the UK. And also then as comparing that to the forecast for the long term, like there's always a forecast of like this basically hockey stick that it's going to increase.
Everyone has
the demand is
stick,
going to the roof. It's going to happen because of electrification.
And that affects the demand for EUAs basically, just as anything else.
But is it going to increase? Well, I have my doubts about it. That the demand for power is going to increase in the UK as well as in the EU.
And especially in the UK. I mean, we said that before, right? But you have some industrial plants that are huge, and if one of those shuts down for whatever reason, then you have a huge amount of demand loss from those industrials, which could have a big effect there.
I mean, we had local elections in the UK recently, and this comes back to a few points that we've discussed earlier. Is I don't think they can allow a big company or a big plant like that to close right now. I think the political blowback would be too high.
Yeah, which I think wraps up this this episode quite well. I think before we leave, though, we always have this thing where we ask the next guest something that you want to ask him, basically him or her. So if you can leave us with a question, can be anything basically, that you would like to have answered.
Just bear in mind this episode is going to take place in September.
September.
So after the summer,
what's
after
gonna
everything
change?
happens,
Yeah. I think, I'll be intrigued to know, do they think the EU can find a route to getting its industry competitive again?
Right.
In terms of, the high power prices, and the fact with what's going on in the US is how can Europe make itself competitive still with what's going on in China and the US?
We cannot say yet who's going to be our next guest, so we'll need to keep that under lid. But until then, I think we can wish everyone in the market a great summer. Hopefully, and I think that closes the last episode of season 2 of the Carbon Trading Chronicles.
Thank you for having me. It's been a pleasure.
It's been a pleasure.
This podcast is brought to you by Vertis Environmental Finance. Join us every month for new episodes. Don't forget to subscribe, rate, and share. Stay tuned for our next episode.